Now I'm going to show you how to do the closing entries, again using problem 3-B. I've copied the accounts from the original worksheet and the adjusted trial balance from the original worksheet to make it easier for you to see what the balances actually are. For our adjusting entries, our closing entries, the only things you're going to close are the temporary accounts. Temporary accounts are your revenues and your expenses. So anything from here up, basically you're going to ignore for now. You're going to start with your demolition fees earned. Always start with your revenues. And we've talked about revenues and fees earned being the same thing. So I'm going to call this, I believe it's April 30th. So we're just going to go 4/30, whatever the year was, 2013. And we're going to wipe out our demolition fees earned account. We're going to close that out and make it a zero balance. If it has a credit balance, how are we going to do that? We're going to have to debit it. If you have one debit and one credit, it will then zero itself out, correct? We will have no balance in that account, and that's what we want. So you're going to just go debit demolition fees earned for whatever the balance is, 187, and then the account that you credit is a very temporary account called income summary. 187,000. I'm going to put an explanation here to close the revenue account. The next step is always to close your expenses, all of your expenses. So you're starting here with your depreciation expense, and you're going down to the end, the utilities expense, right here. I don't really know what the total of all these is, so I'm going to cheat a little. And I'm going to go April 30th. And I don't like that, but that's alright. We're going to credit all of these accounts, correct? All of these accounts will need to be credited to make their balances be zero, each one. Now you can't skip this step and do adjust expenses. You have to list out each one. The account that you're going to close them to is again income summary. This account summarizes what your income is. Think about it. You've got your revenues, you've got your expenses. That tells you what your net income is, correct? So we're just going to take all of these expenses, and we're gonna do this the quick way, and they should be indented. Bear with me here, okay? And all of these balances we're gonna want to credit in order to make them be zero. So I'm going to copy those, and I'm going to plug them all into the credit column. This total is what's going to be debited to my income summary account. Now you would do each one individually. I'm just trying to be a little quick here. So the total of this column, I'm going to get a sum here. Get a little Excel lesson while we're at it. Is going to go here. Now if you remember, back when you did your 10-column worksheet, when you had your revenues and you took out your expenses, is this not the number that you had right there? I believe it was. This account we want to close now. Income summary is the account that we want to make go away next. So we're going to take the difference. And where are we going to put that amount? Where do we always put that amount? Net income, which is what this is, your revenues minus your expenses, is going to go to your capital account. So you're going to look here, you've got a credit balance that's greater than your debit balance, so you have a credit balance, and in order to make that go away, you want to debit that account for the difference between the two. Equals that minus that 77,550. If you recall from your worksheet, that was the number that we came up with for our net income. And we're going to credit J bond capital for that amount. The only other thing that you have to do, the only other temporary account you have, is your withdrawal accounts. Withdrawal accounts right here has a debit balance. In order to make that be a 0, we would have to credit that. What does withdrawals do? It reduces your capital account. So we will debit J bond capital $12,000 and credit J bond withdrawals $12,000. If I were to put an explanation here, it would be to close the expense accounts, to close the income summary account, to close the withdrawal accounts. And those are your 4 closing entries right there. Do your revenues first, then your expenses, then your capital, and then withdrawals.